Well, let's get straight to our second management on the show, Puravankara. The stock is a little bit under pressure despite delivering a very good set of numbers in the second quarter. Mr. Abhishek Kapoor, the CEO of the company, joins us on the show. Hi, Abhishek. Congratulations on a good showing. And it seems the real estate space, well, they finally found their form after quite a few years. So on that note, let's talk about the second half of the year. In the first half of the year, sales volumes around 1.7 million square feet. Can second half of the year be better than that? If yes, if you want to put a number out there. And also a sense on the price hikes. Quarter one, you took price increases. What about quarter two? Did you take price increases? And for the second half, do you see scope to increase prices further?
Thank you for having me on the show. From the price increase, let me start with that one. We have seen some amount of price increase that has happened in the last quarter as well. But now price increase is more on the basis of project to project inventory availability and micro market basis. So it's not generic like before when we were having a lot of inflationary pressure, commodity prices, etc. On the next half of the year on the performance, we definitely believe it will be better than the 1.75 million we have already done, because a whole lot of launches are actually coming into play now in this quarter and the next quarter. So definitely numbers will be far, far better.
Yeah, so just a couple of details on that one itself. I mean, you have, 16 million square feet of pipeline in terms of launch. How much of that comes in the third and the fourth quarter, like you said? And what about collections? What was that number in the second quarter?
So collections, we have done very well. For the first half of the year, we have done 925 crores versus 620, up by 50%. I think, you hit the nail on its head. Collections are the most important, cash flows are the most important thing from real estate point of view. So we have done very well. In fact, our collections for Q2 was 518 crores versus 323 crores in the Q1. So again, up. And we are seeing that as a continued trend, especially given the new launches are also going to happen.
Okay. All right. Yeah.
The follow-up was that of the new launches itself, 16 million square feet coming up. How much of that comes in H2?
So in H2, I think most of it should come through. We have fairly good visibility. In fact, 5 of the projects will be in launch mode in this quarter itself, if not 6. Most likely, maybe we are working for the 6th one as well to come into this quarter. And then the balance will go into the next quarter. So we're pretty much on track. Maybe we'll be cutting it a little bit fine towards March. But yeah, I think we are pretty much on track.
All right. Abhishek, you're basically focused, I think, on the Bengaluru market in Coimbatore. Any plans of coming to Mumbai? Do you all have any plans on that front? And also, since things are looking so good, you'll require to take some debt, I'm guessing, on your books. What would the peak debt level be for the company?
So just to share with you, we're already in Mumbai market with 2 projects. One in Chembur and the other one is in Shilfata, Dombivli. Of course, we intend to add more projects. We have built a strong team over there. And as we go along, we'll participate a lot more in the Mumbai and Pune market. Now, the other part you said was on the
debt.
On the debt piece. On the debt piece, essentially, we are working towards holding the debt at the current level itself. Marginally, it went up in the last quarter, which is pretty much temporary in nature because we were financing out IFC. We have returned their capital and we have got capital at a much lower cost now. And the other one was a bridge which was taken and actually returned already for an acquisition we did in Chennai. So I think we will be pretty much on track in terms of keeping the debt levels at similar levels. That's the effort that the organization is doing. And as we look at the performance, we will see that, on a per square foot basis, our debt will come down and will continue to come down.
What is the absolute debt right now on your books?
So currently our net debt is 2,200 around about. And I think we will bring it back to about 1,850, 1,900 range latest by March or April quarter.
Has your cost of finance moved?
I'm sorry?
How has your cost of finance moved? You said you've refinanced some of it?
Yes. Yes. No, so, basically it was equity. We repaid IFC for one of our projects. That has come in the form of debt, but our average cost of debt is at about 11%. And we are, of course, looking at bringing it down as we go along.
All right, take that point. Thank you so much for joining in, Abhishek. Wish you good luck for your foray into other geographies as well and launching almost 16 million square feet in the second half.